If you've been paying attention to the housing market, and especially if you've been considering buying a new home, I'm sure you're painfully aware that the Fed recently raised interest rates 0.75%. Now, for many would-be home buyers, and possibly yourself, this can change your plans, and it could have made the house that you were considering buying now unaffordable if you didn't already lock your interest rate. And there are indications already that the rate will increase another 0.75% when the Fed meets again next month at the end of July. Does this mean that the housing market is crashing? And no, the market isn't crashing yet, but we're definitely seeing a correction. And the goal the Fed is having by raising this rate is to keep inflation down and keep the housing prices from skyrocketing. But honestly, they probably should have started a little sooner than they did. So what is happening and what the impact is having that I'm seeing in the market is that it's making buyers take a pause. A lot less buyers suddenly they just stop shopping. We're seeing this a lot in my market. There are less offers. We're not seeing the multiple offers anymore. They're taking more time, less visitors at open houses, and buyers are hoping that the interest rates will come down or the prices will come down. But it's unlikely if you're a buyer that you're going to get both. You're not going to get the rates and the home prices to come down at the same time. Now, anytime there is a rate increase, buyers will pause for a minute. It might take a week or 2 weeks to get their mindset around what the new interest rate is, what the new payments are going to be, and to make those adjustments and to make more sense of it and what they can, how that impacts their mortgage. Higher interest rates aren't necessarily a bad thing if you're a buyer. I mean, it feels like a bad thing to begin with, but there are some good things that come from it. Like buyers can have inspections again. There was a time for the last couple of years where a seller would not even consider your offer if you had an inspection contingency. They wouldn't even consider it if you had an appraisal contingency. So buyers were on the hook to come up with the difference to make up that appraisal gap. And now buyers have a little bit more negotiation power there, especially when it comes to repair requests. So if you are by making an offer on a house and it needs a new roof or some roof repairs or any kind of repairs, now sellers are going to consider those requests. And you as a buyer have a much better chance of having those things fixed. That wasn't the case before these recent increases of interest rates. I've even seen recently sellers offering to pay buyer closing costs. I mean, this is where we're at now. In just a short few weeks, it went from completely a seller's market to now, wow, buyers have some power to negotiate some things in their favor. And that's not a bad thing for buyers. So don't look at only the interest rate. Some good things are coming from the increase. But be warned, there are indications that the Fed is going to increase the rate again, significantly, 0.75% again, just in about another month and a half when they meet again at the end of July. An article in Financial Times warned that the rate could increase another 0.75% when the Fed meets next, which is in late July. Here's a quote from that article. A top U.S. Federal Reserve official expressed early support for another 0.75 percentage rate increase at the central bank's next meeting in late July, in anticipation that inflation will not moderate sufficiently to slow the pace of monetary tightening. In remarks delivered on Saturday, Christopher Waller, a Fed governor, affirmed the central bank's commitment to tackling the worst inflation problem in more than 40 years, saying it's all in on reestablishing price stability. So I would say that that's a pretty strong indicator that we're not done with rate increases for the rest of this year, and we're definitely going to be seeing one in July. Will it be 0.75%? I don't know. Sounds like some people are supporting it. It really could be. So we'll have to wait and see. So this is my advice to you. If you're wondering if this is a good time to buy, only you know your specific situation. If you're considering buying a new home, even if you have to sell your home first, the first thing you need to do is talk to a lender. Talk to a lender because you can get your interest rate locked now. Some lenders are offering lock and shop programs, which is you get pre-approved ahead of time. You go through all the underwriting. They will lock your rate and give you several months to find the home you want to buy. So even if you're not sure you're going to buy, it's not a bad idea to get a rate locked loan in place ready in case you want to use it. Because if you're at all concerned that a rate increase will price you out of the market, this sort of think of it as your safety net. It's not going to do you any harm. You'll have the hit on your credit report, but that's it. At least you know that for the next 2 to 3 months, you have the current rate locked down and you can move forward with your purchase if you find the right home for yourself. And remember, if you're planning to be in your next home for 5 or 10 years, even in this uncertain market, it's okay. The alternative is paying rent, which is highly inflated right now, and there's no sign of rent reducing. So if you have time to wait for the cycle, you're going to stay in your home for 5 or 10 years, you're going to cycle back through multiple types of real estate markets, and you can wait it out for the next big boom in the real estate market. Now, if you're renting, you're still paying a mortgage. It's just not yours, and you're getting absolutely no benefit from it. Now, in my local market, which in my city, which is Livermore, California, there are 156 active homes for sale on the market as of this morning when I looked. They now have an average days on market of 31. Now, it wasn't long ago that the average days on market was like 6 to 8. That is a big increase, jumping to 31 days on market. That means it's going to take longer to sell your home, and it'll probably take longer to find the home you want to buy. And out of the homes currently active in my market, 15 of them have had price reductions. I'm also seeing notes in the MLS, which I haven't seen for a long time. Comments like motivated seller, seller willing to pay closing costs, things like that. That just hasn't been around for a long time. And buyers should be excited by this. Not so excited about the rate increase, but if it wasn't for the rate increase, you wouldn't have these other options. So also in my market, 12 homes have been withdrawn from the market completely. Most likely the sellers weren't getting the offers that they wanted to get. It wasn't high enough. And honestly, like sometimes sellers put a house on the market and their expectations are such that they'll probably never sell, because if the market says your home's worth $1 million, they want $1 million too. If the market says your home is worth $1.5 million, they'll want $1.8 million. So some sellers just are never really going to part with it because they always think that their house is worth more than it really is. And that's regardless of the market. So sometimes that happens. So currently we have 12 homes in the market that have been, or 12 homes that were on the market that have been withdrawn. A few of them have been relisted as new listings. So maybe it just took those sellers a little bit of time to adjust. So all of this to say, if you're considering a move, you have a new job, maybe you need a bigger house, maybe you're ready to retire, you don't need the big house that you're in anymore, and the market has you feeling stressed or uncertain, the best thing you can do is just stay informed. Be aware of what's happening. Pay attention to your local market. If you're unsure about where to get information, subscribe to my channel. I'll be doing regular market updates and you can get some information here. And if you are in my local market, which is the San Francisco Bay Area, and you need real estate advice specifically for buying or selling in the San Francisco Bay Area, all my contact information is in the description below. And I'll see you in the next video.